How's it going, everyone? Today we have DexterLab with us, and he's going to be talking about open, high, low, close, and the power of three. Let's get into the video.
Okay, welcome to the Monster Lab. This is one collaboration with the Edu, T-Trades, and Monster Lab. The beginning for one Power of Three Universe, it's the opening, okay? And the same time, the accumulation phase. The opening, it's the time. The accumulation, it's the price development. The second phase, it's the manipulation. In other words, it's the week high for the candle in development. The next phase, it's the distribution. This distribution, it's for printed the body, the candle, for the candle in development, or the power of three in development. And the close in the power of three, it's the week low, the opposite week. Okay, so in every power of three, you find this phase: one opening price, one manipulation for printed the week high or the week low, and the next move it's for printed the body, the candle, and the close it's the opposite week. It's for printed the week high or week low in the opposite direction for the manipulation phase. Okay, in this moment, time and price, it's present in one candle, in one power of three. When you say time, it's the same when you say the open, because every opening, it's in a specific time, it's a specific hour. So in every opening price, this is the time element. And when you say manipulation or distribution, you say price. It's the same for price, because when price open, this is in a specific time, and when price move in the manipulation phase, price moving to the one specific PDRA. In other words, in one specific price. One daily fair value gap, breaker, I don't know. But when price have this phase for manipulation, price looking for one PDRA higher time frame. So this is price. And when one power of three or one candle opening, this is time. When one power of three close, it's the same. It's in a specific time. Close one candle and open the new candle, power of three. In the week high and the week low, in every power of three is in one specific PDRA. So when price open and moving to the manipulation, it's for printed the week high in one specific PDRA, the same time frame or higher, never lower. Lower when you have the higher time frames in framework and you need to refine this PDRA, but your main PDRA it's for the same time frame or higher time frame. Okay, and when price printed this week high and the distribution is development in the close, price looking for one opposite PDRA in the same time frame or higher, and price stop in this PDRA. So the week high and the week low for every candle, it's in one specific PDRA, the same time frame or higher time frame. Okay, in this topic, the focus it's only in the 4 old candles, 4 old openings, but these concepts it's for every time frame, monthly, weekly, daily, every time frame. But in this topic, it's in the 4 hour because it's for intraday purpose. Inside the daily candle, you can find multiples candles, the 4 hour. So it's more it's better for intraday purpose because you only need one single candle for make money or make profits or reading the tape or tracking price or I don't know. But the focus is in the 4-hour openings. And in the index futures, you can find 4 different time windows. The first time windows, it's in the 2 a.m. In the 2 a.m., new 4-hour candle open in the index futures market. Okay, and this candle close to the 6 a.m. and open new candle. It's only 4-hour candles. So 2 a.m. it's the first candle, 6 a.m. it's the second candle, 10 a.m. it's the next candle, and the last 4-hour candle it's in the 2 p.m. Okay. If you're working with the forex, it's different times. It's one less hour. The opening in forex, the first candle, it's in the 1 a.m. candle, New York time. All these times, it's New York time. Okay. The next candle, it's in the 5 a.m. and the next candle in the 9 a.m. So in forex only you have 3 candles, different candles, because the last candle in forex it's the London close, and forex don't move in the PM trend. It's small moves. So in index futures you can find 4-hour candles. In forex only 3 candles, the 4-hour time frame. Okay. Inside the daily or the every power of 3, 4-hour power of 3, you can find the cruder representation, the opening, week low, distribution, week high, and one close. Okay, but inside this representation candle, in lower time frames, you can find the internal dynamics or the price moves, because price don't move linear in one single move. In this representation here, you can see one single move in bullish to the low, to the high. It's one single move. But in lower time frames, you can find internal dynamics. You can find different types moves. You can find retracements inside this move to the low, to the high. So here on the left, you can see the opening, 2 a.m. It's the same opening here, and when price moving for printed the week low, and the same time price looking one PDRA higher time frame, it's price. Okay, so here you have time and price moving in this manipulation phase, looking one higher time frame PDRA, the same time frame or higher, and the same time for confirmations this week low, you can find one SMT, smart money tool, one crash correlation with the one market in correlation, positive or negative. In this case, positive correlation. Imagine, I don't know, this is Nasdaq, and you can find one SMT here with the SPUS or Dow in this week low. The other market don't take in this low, printed one SMT. And this is your confirmations for this week low printed, because when price is moving to this PDRA and printed this SMT, the price is visuality, it's bearish. The candle in the development looks bearish. It's the other color, it's bearish, because in this moment when price it's in the PDRA higher time frames, they don't have for the moment the body the candle. So visuality it's different. So for this reason you need one confirmation tool, and your confirmation tool it's the SMT. but it's no synchronization tool. It's only confirmation. Okay. And when price printed the week high in this candle, it's the same dynamics. You can find one price element, in this case one PD array, the same time frame or higher, and the same time you can find one SMT in the highs, and this is your confirmations for the high for this candle, and price one little retracement for the close. But in this high, your confirmations for the end for the distributions, it's one SMT with one correlation market. It's the same for the low, it's the same for the high. Okay, in this presentation you have two frameworks for working in your charts. This is the framework number one. When you identify the opening and the manipulation phase, you can measure with the standard deviations the manipulation leg, high and the low. This presentation is not for newbies. You need see the last videos for the standard deviations or internal dynamics. Okay, so in the two deviations and the 2.5 deviations, you can find the last moves and you can find the zone for one retracement or one reversal. Okay, in one internal dynamic, its probability you don't find in one single candle and you need two candles. If you see in this representation, it's the same for the last cruder representation but in one single candle. But here it's different because this manipulation leg, it's in the 2 a.m. opening, okay? But when price is in development for the distribution, here, new candle open. But at the same time, price don't ratchet the 2 deviations or the PDRA higher time frame or the 2.5 deviations here. So when price open this 6 a.m. candle, this price dynamic have unfinished business due to this PDRA higher time frames. So this is important because you don't find ever in one single candle all internal dynamics. It's probability the first candle, it's the main range for projecting these standard deviations and moving to the next PDRA, opposite PDRA. This move need 1 or 2 candles or probability 3 candles. I don't know. It's different in every case. In this case, you can find 2 different openings, the 4-hour candle, 2 a.m. and 6 a.m. So this is important because in the 6 a.m. opening, price it's in the mid for the manipulation leg and the draw on liquidity in the PDRA. So have unfinished business in bullish move. Okay, so this is very important when price open here because you can find different types for moves and probability in 2 directions. The first moves for ratchet the unfinished business to the PDRA, and when price ratchet this PDRA higher time frame, and you can find the SMT, its probability price moving in this retracement or one reversal below the 6 a.m. opening. So in this same candle 6 a.m., its probability you can find 2 different moves, one bullish and one bearish. Okay, so when price ratchet the 2 deviations and the 2.5 deviations, price it's in premium price and one PDRA higher time frame. So in this moment you anticipate one retracement to the equilibrium to discount for the previous range. So it's very important take the previous range for the previous candle, the previous opening. And when price reaches the PDRA and the 2 and 2.5 deviations, you anticipate this retracement. Okay, these retracements, it's one range opportunity for take one short, in this move. But the question is, this move, it's one retracement or one reversal? Okay, so in the 6 a.m. candle, in this moment, you can find two types for moves. In the beginning, one bullish move, when price reaches the PDRA, price moving in the opposite direction below the time opening. So this is one range opportunity in bearish move, okay? But it's important identify higher time frames for if price is in one retracement only, in one reversal. Okay, so when price is in bullish and it's in one retracement, you can find other opportunity in the bullish move. And the 6 a.m. candle printed one more large wick in the low in discount. And if you see, this 6 a.m. candle have three different types move. The first move, opening in the mid range here and have unfinished business in the PDRA. So the first move in bullish move, and when price reaches the PDRA higher time frame and the 2.5 deviations here, one retracements to discount. This is other range opportunity in bearish move. And when price again reaches the discount and one internal liquidity here in this move here, you can find one internal liquidity, because in the retracements the priority it's the internal liquidity. So if price is in retracements, the internal liquidity it's the draws in the retracements and the PDRA for continue in the same direction for the previous range. Okay, so equilibrium, and when price reaches this internal liquidity, the same dynamics. You can confirm with one SMT in this low. When price printed this weak low for this candle, you can find one SMT here for confirmations this weak low printed. Okay, look, in this moment price is printed the weak low, but visuality it's bearish. This is important. And when you find this SMT here, it's your confirmation for the weak low printed in this candle and price moving in the same direction. This is the framework number one. Framework number two, it's the same framework, the same candles. This is 6 a.m. candle and 10 a.m. candle. Okay, it's the same. 10 a.m. open in the mid, have unfinished business to the PDRA and the 2 deviations and the 2.5 deviations here. Price moving in bullish move for this unfinished business. You can find one SMT here, and is your confirmations for the retracement or the reversals here. Okay, and you anticipate here one first move to equilibrium to discount for the previous range. Price moving to discount, and in this moment this is different case, because the first framework it's one retracement, this is for one reversal. Okay, so when price moving in this below to equilibrium, its probability price have one retracement to the opening, the present opening. In this case, it's the 10 a.m. opening in development. So price retracements to 10 a.m. opening, and in this moment you can find untruths in the breakers here or internal liquidity here. But it's important in higher time frames. You have the bearish direction. Its probability when you have the bearish direction in higher time frame, your first move in the manipulation phase, you need in the opposite direction. So its probability here, it's for printed, I don't know, 1 week in one higher time frame power of 3, weekly power of 3, daily power of 3, I don't know. And in this moment, this week high, it's printed, one SMT confirmations and price moving this first bearish move, and have one retracement to the opening, and you can find here the breaker or the one fair value gap or one CB plus overlapping with the time opening, 10 a.m. opening. And in this moment, you anticipate the reversals here. It's different framework, okay? But you need the higher time frames. In every price move, it's in a specific PDRA, in a specific time openings. These two different frameworks you can find every week in different days. You can find frameworks for continuations, frameworks for reversals. It's not necessary take the more lower point in this price dynamics. You need only reading the tape. You need identify the openings, the previous range candles, the present candle, where is the opening in function for the previous range. This is your work, and when you have this framework, it's more easy anticipate the next price move or reading the tape, tracking price. It's more easy when you have the framework in function for the previous range. Okay, this is one example for the framework number 1, continuation profile. Okay. It's important in your mind, never you find the perfect frameworks. These frameworks have little difference, but it's the same core. In this framework number 1, 6 a.m. opening here and 10 a.m. opening here. 6 a.m. opening here, open, and this is the accumulation. Price moving, fast moves to bearish and react to one high time frame PDRA, the same time frame or higher. In this case is one bullish order block, 4 hour, and these two candles power of 3s, it's the 4 hour candle, so it's the same time frame. In the 6 a.m. candle, price printed this manipulation leg, and you can measure this manipulation leg, this high and this low. Okay, and the two deviations, it's more higher, and in the opposite PDRA, it's one daily breaker here. Okay, so 6 a.m. candle, it's the main range because it's your projections range, your standard deviations range, and when price close this 6 a.m. candle, open the next 4 hour candle is the 10 a.m. candle. And the question is, where is the opening for the 10 a.m. candle in function for the previous range or the previous power of 3 or the previous candle? Price don't open in the two deviations. So this candle, 10 a.m., it's for continue because have unfinished business in the higher time frame PDRA and the standard deviations range here. So when price open in 10 a.m., have one retracement inside the range, the present range, for printed the week low, and continue the distribution, continue in the same direction for the previous range, 6 a.m. range. And look here, price open, retracements, and what is the priority in the retracements? The internal liquidity. This is the fair value gap here. retracements to the fair value gap, and continue for printed the body the candle in the distribution. You see? So you can choose in these frameworks in function for the previous candle, for the previous range. When the previous range reaches one higher time frame PD array, you can find one SMT for confirmations, and you only need tracking the price for the unfinished business. And this unfinished business is the opposite PD array, the same time frame or the higher time frame. In this case, the week low in the 6 a.m. it's in the same time frame, bullish order block 4-hour, and the dragon liquidity opposite PD array, it's one daily breaker, bearish breaker. When you have the opening, in this case 10 a.m. opening, and when you anticipate the printed this week low or this week high, it's very, very important use the confirmation tool. In this case, you have the framework for the 10 a.m. continue to do unfinished business, and you anticipate the week low printed. So this week low in this candle, your confirmation tool, it's the SMT. This is the market spoof. This market, it's a spoof. And if you see this market, don't take in this low. So you have one crash correlation here inside. Okay, this is important. Inside for the opening in the development. The opening in the development here, it's the 10 a.m. The power of 3 in the development, it's the 10 a.m. So you are working in one single candle, but in function for the previous range. When price printed this manipulation and this SMT is your confirmations for the week low printed for moving to the unfinished business. And when price moving above the time opening, in this case 10 a.m. opening, is other confirmation for the distribution phase. Look here, when price close above with body the candle here, this 10 a.m. opening, body the candle above, and the next candle open and retracement inside this time opening, and continue for printed the body the candle. Remember the beginning for this presentation, the cruder presentation, every power of 3 open, manipulation, printed the week low or week high for the candle, SMT confirmation, this week high or week low, and the next phase it's for printed or development, the body the candle, the distribution phase. Example number 2. This is the framework number 2 for one reversal. In this case, the candles, the present candles in this framework, it's 2 a.m. and 6 a.m. The 2 a.m. it's the initial projection range here. It's the more higher range here, and take the first distribution leg here. And the important thing here is the next candle. What is the opening for the next candle? The 6 a.m. in function for the previous range. Okay, so you have in this framework the initial range here and price moving to the 2 deviations and the 2.5 deviations here. The 6 a.m. candle here open in the mid for this move. Don't open in 2 deviations. Don't open in 2.5 deviations. So when the 6 a.m. candle is open, have unfinished business for react the 2 deviations and the 2.5 deviations. Okay, but when you don't have one PD array in this deviation range, it's probability price moving the double expansion move. But in this double expansion move, its probability you can find the higher time frame PDRA. In this case, it's the previous daily low in the same area for the 4 deviations. Okay, so when price here in the 6 a.m. opening, price moving to the unfinished business to the 2 deviations and 2 and 0.5 deviations. In this moment, you need the SMT. Remember, you need the higher time frame PDRA and one SMT in this area, and you don't find in this stage, you don't find one SMT. Price continue in bearish and close with body the candle below the 2 and 0.5 deviation. This is one rule in the standard deviation theories. When price close below the 2 and 0.5 deviations with body the candle, it's high probability for price continue to the 4 deviations, and this is the second silver bullet zone. If you see here this move when price close with body the candle, these retracements in bullish, it's the second silver bullet zone for moving to the unfinished business or moving to the higher time frame PDRA. In this case, this little move, it's for reach the previous daily low and the 4 deviations. Okay, and here price, it's the beginning for this reversal. Price don't moving to premium for continuing bearish. No, price reach the previous daily low and immediately reversals in the higher time frames PDRAs. And in this price dynamic, you can find the SMT for confirmation this reversal. Okay, and you can projection this high and this low, the last manipulation leg for moving to the 2 deviations and the 2 and 0.5 deviations. And look here, price moving above the 6 a.m. opening and the 10 a.m. opening. It's broken. All this range, it's broken. This is the framework for reversals. It's different for the framework number 1, but it's in 2 candles in function for the previous candle. But remember, this is very important because the 6 a.m. candle, it's not only moving in bullish move. You can find price moves in different directions. The first price move in the time opening 6 a.m. it's in bearish move because have unfinished business. But in the same candle, when price reaches the higher time frame PDRA, the 4 deviations, printed one SMT confirmations, price moving in the same candle, in the same opening, one price move in bullish in the opposite direction for the first move. So you have 2 different range opportunities, one in bearish and one in bullish. But you only need take one, the more discernible, the more clear for you. The Power of 3 universe. In every Power of 3, you will work in base for the previous Power of 3 or the previous 2 Power of 3s. When the Power of 3 open in the 1 deviation or the 1 and 0.5 deviation, it's high probability continue to the 2 deviations or the 2 and 0.5 deviations plus PDRA. This is very important. One PDRA in the time frames overlapping the standard deviations with the high time frames PDRAs. When price open, the Power of 3 open in the 2 deviations or the 2 and 0.5 deviations, it's high probability for one retracements to equilibrium, or if higher time frames, it's in the ready for one reversal, you can find one framework for the reversal. Okay, this Power of 3, it's no random. This Power of 3 working in function for the previous Power of 3s. Okay, here it's very important you study the previous video, internal dynamics plus time, because in this price dynamics you can find different PDR rates. Okay, and this PDR rates it's high correlation with time, with the openings in different time openings in the development, because the time it's the first element in this price move. So when price open in one specific area in function for the previous range, this present candle is in one specific PDR array and one specific move, one specific manipulation or distribution, because it's not the same when price open in the 2 deviations or the 2.5 deviations and when price open above the time opening, because when price open in the 2 deviations or the 2.5 deviations, its probability the first internal dynamic it's printed, and this is the turtle soup, the first internal dynamic. So when price open above the time opening, its probability this candle, this retracement for this candle, it's inside the breaker, not the turtle soup, the breaker. So it's very important identify what is the opening, the present opening in function for the previous internal dynamics, because the first internal dynamic, turtle soup, the next the order block, the next the breaker, and the next the one OTE, fair value gap, or the silver bullet zone. I don't know. It's very important identify what is the present opening and anticipate the PDR array for working in the next price move. All the price market, you can find all dynamics markets in this cruder representation for the power of 3. This representation, it's powerful, very, very powerful. It's all the understanding these markets. You can find all price moves, all dynamics you can find in this simple representation. These representations, it's the complete market, the complete price dynamic in the market. But you need dipping in this cruder representation, in this power of 3. Inside this cruder representation, you can find the price dynamics, all the price dynamics. This is one single power of 3, and in the lower time frames, if you dipping inside this cruder representation or this power of 3, you can find these dynamics in price moves, little retracements for all this development. And inside this price dynamics, you can find the internal dynamics. You have the opening, and the first phase, it's the manipulation. And when this manipulation is printed, your confirmation tool, it's one SMT. But at the same time, the first internal dynamic is in development. What is the first internal dynamic? The turtle soup. When this SMT is printed the week high for the candle in development, and the same time you can find the first internal dynamic, the turtle soup. The second internal dynamic, it's the order block, is the last bullish candle for taking the previous high, and when price close below this order block, the last bullish candle, this is your second internal dynamic, the order block. When price moving and close below the opening price in development, in this moment you can find the next internal dynamic, the breaker zone is in the time opening. This is very important because the breakers, the more powerful the breakers, is when this breaker is with one time opening in the opening for the present candle, the present power of 3. And when this breaker have these reactions in bearish move, you can find the next retracements in specific zones. You can find the next fair value gap or OTE, and you can choose when price is in this fair value gap or OTE zone. You can choose in the continue because you already have the previous information, the previous internal dynamics, the previous confirmations in the SMT, and price is in the finished business, moving to the 2 deviations and the 2.5 deviations, or the drawn liquidity, the higher time frame PDRA in development. The next retracement or zones for this price dynamics is in the 1 and the 1.5 deviations, or in other words, in the silver bullet zone, for continue to the 2 deviations and the 2.5 deviations. And when price printed or reached this PDRA or the 2 deviations, your confirmation tool, it's the SMT in the lows. If you add measure the manipulation leg here, this is the crude representation for the power of 3 and all the piece for ICT in one single representation inside the power of 3. You can find the all dynamics for the ICT, the PDRAs, the internal dynamics, power of 3, the time, openings, the close, all market, all the piece in these markets you can find in one crude representation for the power of 3. It's very, very powerful. Okay, here one example for the power of 3 plus internal dynamics plus standard deviations plus time. All the piece here. This is the daily power of 3. Is the Nasdaq in the 15 minutes chart. Okay, so your attention it's in the opening, in the present opening. The present opening here, it's the midnight open here. Midnight open, it's the opening for this daily power of 3 here. So you need the previous range. So this is the daily power of 3 in Tuesday. So what is the previous power of 3? The Wednesday power of 3 range. So the Wednesday range, the Wednesday projections, the previous candle, the previous power of 3, you have this projection range, this low and this high. And what is the opening in function for the previous range? Is in the 2 deviations and the 2.5 deviations. Price moving below the 2.5 deviations, one little retracement, and moving for printed the week low to the 3.5 deviations, and taken the short-term low here in the Tuesday low and reached this higher time frame PDRA 4 hour and one order block, daily order block, the main threshold. In this area, you can find the main threshold for the order block and this PDRA 4 hour candle. The first internal dynamic here, the turtle soup, taking this low in the 3.5 deviations, turtle soup here, and the previous or the last bearish candle is your order block here, the second internal dynamic. Price close above this bearish candle and have these retracements, this main threshold for this bearish candle, but inside this bearish candle, and price moving above this bearish candle and moving above the midnight open. So remember, when price moving above the midnight or the opening in play in development, the breaker zone, it's in development. So you take here this low, this high, and this low, for your breaker. This is your breaker zone here above the midnight open. This is the next internal dynamic here. Inside the daily candle. All these dynamics inside in one single candle. Okay, and when this candle close, what is the close here in this new projection range from this high and this low? Price close in the 1 and the 1.5 deviations, and don't ratchet the 2 deviations or the 2.5 deviations. So have unfinished business, and you have range opportunity for the next candle, the next power of 3. Look here, the next power of 3 open, but the previous power of 3 candle don't ratchet the 2 deviations or the 2.5 deviations, so have unfinished business. What is the high probability for the present power of 3, for the new power of 3? Continue in function for the previous range. Continue to the 2 deviations. So you anticipate one little retracements, the fair value gap, OTE zone, silver bullet zone, for continue to the unfinished business, to the 2 deviations. And look, this is more zoom in the same candle, midnight open, little retracements, the fair value gap, OTE, balance price range here. And when price moving in this bearish move, you can find SMT here for the confirmations for this week low in this daily candle printed, and price moving in the same direction for the previous range because have unfinished business. This is the candle for Friday, the previous Friday, and this is the close. And today it's the same, open in the mid on the way for the 2 deviations and the first move. Today on Monday it's moving to the 2 deviations because price have unfinished business. Other example with all the piece in the same framework, the same representation. This is 2 different dailies power of 3s. Your attention it's in the present opening, midnight opening. The midnight opening, what is the opening in function for the previous range? This opening, this midnight open in the 1 deviation and the 1.5 deviations in function for the previous range. So have unfinished business moving to the 2 deviations and the 2.5 deviations, and the previous daily low it's in play here, and this brown line it's one daily bullish order block, this brown line here. So this candle, the opening, the midnight opening 1 and 1.5 deviation, have unfinished business, so moving the first move in bearish move for ratchet the unfinished business, and when price finish this business and printed the week low for this daily power of 3, you can find the SMT here, the previous daily low or the short-term lows, and the internal dynamics it's printed. The turtle soup, it's the first internal dynamic below the previous daily low, the next internal dynamic, the bullish order block here, price close above the last bearish candle, and the next candles retracements in this order block, and continue in this reversal profile. This is the framework number 2, but with the daily candle and plus internal dynamics. Okay, but in these 1 deviations and the 1.5 deviations in this time frame, this is 15 minutes time frame, you don't find one fair value gap, right? You don't find one order block here, right? But you need moving to the lower time frames for find in the same areas with the same narrative, with the same logic, one fractal or PD array for this price move. Okay, so moving, let's go to the lower time frames. 5 minutes. In your attention, it's here in the 1 deviations and the 1.5 deviations. Look, this is 5 minutes. The turtle soup here, the order block, breaker zone here in this area, and the 1 deviations and the 1.5 deviations. You can find the fair value gap, silver bullet zone, and continue with the 2 deviations and the 2.5 deviation. So when you understanding these dynamics, these power of threes, you can find different opportunities in the same candle, but you need identify the framework, the present framework, and anticipate the next price move. Okay, this is all for this presentation. I hope this presentation is clear and helpful for your understanding this market and how to navigate in these candles, in this power of threes.
Well, thank you, Dexter, for this presentation. If you guys do want to learn more from Dexter, his links will be in the description below. If you did enjoy this video, please consider giving it a like and clicking that subscribe button. I'll see you guys next time. Have a good one.